We're here at Hostcon 2024 in Houston, Texas. Come check it out. So we've been here the last couple days, some incredible speakers and networking. We're listening to Cody Sanchez yesterday, networking across Houston. Guys, these are the best of the best when it comes to short-term and medium-term rentals. We've been learning a lot that we can apply in our business, and I'm excited to share a lot with you guys. So come check it out, and hey, more importantly, I'm going to see you guys in October in Cancun at VPCon. One of my favorite parts about being a full-time real estate investor is getting to go to conferences across the country. But today, I'm actually in my hometown, Houston, Texas, for Hostcon. Guys, the speaking lineup has been unbelievable. From Subto Drew, one of my favorite creative finance guys here in Houston, to Tarek El Moussa, all the way down to Cody Sanchez and buying businesses. It's been a jam-packed, great speakers and great networking. Excited to share more big takeaways with you guys in my future content.
Hey, Casey. I work with a lot of property managers, and one of the number one questions I get asked is, how do we grow? Do we buy a property management company? Do we network with realtors? You know, do I do a bunch of cold calls? How does this work?
Absolutely. And you want to buy for yourself, or do you want to buy just to manage more units?
Buy to manage more units.
Buy to manage more units?
Yeah.
Yeah, so I would say the first one is we've bought ours because we manage all of ours. So we go direct to seller. So we do a ton of marketing. We're doing like cold calling, we're doing texting, Facebook ads. Like we're going direct to seller. Like my teams, their goal is to book 30 appointments a week with me. So I'm talking to sellers that are motivated to sell every single week. Because you've got to talk to a lot of people to ultimately close a lot of deals. So that's the best way to actually go buy and acquire them, right? Now to buy and acquire a property management company or find more of them, we actually reach out to a lot of property management companies to find deals, because these property management companies, they know a lot of people selling, right? They work with all these property owners, so they're typically going to know when they're selling first, and if they can come talk to us, then we can be the first ones to buy it.
Got it. What about with realtors or brokerages? You know, I know a lot of people network with them and they establish deal with them.
Yeah.
Where, you know, when their homeowners want to sell, they'll pass them the deals, and then, you know, for their leads, they'll pass them back to the property management company. But how would you recommend that? Yeah,
well, the first one, I should answer this first for you. To get more units is Google reviews, 100%. So on our website, I'm not a broker, not a property manager, I just manage my own stuff, but because I've taken the time to, when tenants move out, and just do a better job of property management, and we get reviews on Google, I get leads all the time looking for property managers. And I'm not even a broker, so I'm like, hey, I actually have to refer them to another property manager. So the biggest thing is reviews, because people, what's the first thing you're gonna do?
I'm gonna Google.
Yeah, you're gonna go on Google, you're gonna look at reviews. So 5-star
How do you
reviews.
get the reviews?
Yeah, just asking our tenants. Like anytime a tenant moves out, we get and they have a positive experience, we ask them to give a review. You know, another one is, we have a lot of competition in our market where there's a lot of tenants trying to get into our unit. Not all of them make it in, but if they have a positive experience, we say, hey, I'm sorry this one didn't work out, could you give us a review? Like anybody we have a positive interaction with, we go and ask for a review.
Amazing. One more question is, how would you actually work with the agents?
I think the biggest thing is do a good job in property management. In general, property managers, I mean, it kind of has a bad reputation for property managers who don't care about the properties, don't follow through. Like the biggest thing is just get known for a reputation that you fix things on time. If you have part of that is you gotta have a good contractor network and be able to actually deliver on your promises. So one thing I would do is go build out my contractor base so I can actually deliver on your promises, right? And then start showing people and start managing other properties and get them to refer more people. Because again, good property managers are not a dime a dozen. There's not very many of them. And if you are good, people are gonna know and they're gonna refer you.
Yeah. And are you doing any education, maybe like a marketing drip, or on market trends or regulations coming into the city?
Yeah, so I have my podcast. My goal is actually to help oil and gas, any W-2 professional invest in real estate. My goal is to help 100 people achieve financial freedom through real estate. And we're actually doing that through our podcast. We have like a training module to help people do that. It's all free. We just love helping, right?
How does a property management grow? Right? Do I acquire another property management company? Do I network with realtors and brokerages? Do I cold call? Do I do, mailers?
Yeah.
There's so many ways to do it. is there a best strategy, or is it all of them? You do all of them.
It is. It's all the marketing. But here's the thing. There's a huge opportunity. We've been looking at this too because eventually we want to build out a brokerage and be able to manage other people's property. So think about if depending on where you live, there's always these old mom and pop property management companies that have been around for a while, right? Those guys eventually all want to retire. So the best way is to start finding them. Like we've been thinking about doing like direct mail, even going to title companies. Like it's not hard to go find property management businesses and just start reaching out. I mean, you might have to hit them up with text messages, Facebook messages, cold call, direct mail, all the above, but just start talking to them and plant the seed, right? This isn't like buying a house where you're going to go and ask them if they, like you're finding somebody who's super motivated is going to get foreclosed on, they're going to sell in a week. This is going to be like plant the seeds now, start talking to those property managers and be like, hey, would you ever be interested in selling? Or like, are you ever interested, like what's the long-term look like? Are you going to be in the game? And obviously their age is going to dictate a lot of it. There's a lot of people who are probably close to retirement, and that's some people I'd be talking to.
Yeah, I think that answers my question. That was awesome.
I'm here with Clint Crow here at Hostcon. I want to talk about what we're starting to do in multifamily to where we're driving revenue in multifamily with short-term and medium-term rentals. We've done this on actually 2 of our properties now, a big 65 unit. We turned 6 units. Actually, we're up to 8 units in that building. We've converted into medium-term rentals, already seeing a lot of demand. We actually bought our latest asset in Evanston, Wyoming, down close to Salt Lake City, 45 units. We've made 5 of those into short-term rentals, and we're really expected to really drive our revenue. But I'm curious, we've talked about this idea before. What have you guys been doing on this platform?
Yeah, so similar, man. We love it. So we like the stability of long-term rentals, but we like the juicier returns of the short-term rentals. So if you can do a blend of both, why not, right? It's more attractive for investors as well. So if you're trying to offload a property or to raise money for it, the stability, like I said, of the long-term stuff is really attractive, especially for risk-averse people that are investing in, 65 units is no small picture, right? Yeah.
How do you decide how many are going to be short-term, how many medium-term, how many long-term?
It's a great question. Our favorite saying is crawl, walk, run. So we usually start small. So do a couple, see if there's demand. 65, you can easily do 10% of those. And if they're filling up and you like the occupancy levels, keep going.
Yeah,
do a few more, let it trickle in. And you can always come back to long-term, right? But you don't want to evict to do more short-term. So,
absolutely.
Yeah.
We've talked about too, like when it comes to the evaluation and the exit, well, at a minimum, you're going to get increased cash flow, right? But what have you guys started to calculate, or do you guys build that into your pro formas, or how do you guys think about that?
We do. It's tough because institutional investors don't really see short-term rentals as a stabilized asset class quite yet.
Yep.
They are starting to. You're starting to see your Goldman Sachs and your big Fortune 100 companies buying up residential real estate in the short-term sense, but they still don't really value it the same way that they would a long-term stabilized apartment complex. So that's kind of why, again, we've landed on the middle, where a blended rate is good, but we can definitely apply a cap rate calculation to short-term rentals when they're grouped together or when they're in a building like that. So long answer to yes, we do incorporate it into our pro forma.
Yeah. I'm with you. Yeah, we've done similar things. So we brought, like on my last 45 unit, when I was raising money for it, I kind of ran 3 different scenarios, right? I had my base case, my kind of stretch, and then I called my last one my SDR case, where I basically said, hey, we're going to take, like you said, roughly 10% of these, we're going to go make them shorter, medium terms, and here's what the cash flow looks like, and here's potentially what the exit looks like. And it gets investors excited. Are you seeing that?
Absolutely. Yeah. We can say, look, we've got 65 units that long-term rent for X amount of dollars, but we can turn 10 of those into short-term rentals that juice the return. And in a worst case scenario, you could go back to that baseline of long-term rent. Then you can sneak a couple of extra points out of the deal, definitely.
Yeah, I like talking about juicing it up, or just, to me, it's icing on the cake, right? I'm getting my investor excited about, hey, here's the performance based on long-term, but if we go do this, and then the cool thing is when you start to do it and you start to show them the numbers and the increased cash flows, I don't know, as a capital raiser, it's making a huge difference.
Absolutely, investors love it. Long-term rentals, I don't want to say they're boring, but they're just kind of tired, and short-term rentals fun, sexy, dare I say. So it's a lot easier to raise money, at least on our end, when you bring short-term rentals in. And part of that's because of the returns. The return profile is so much better, but also it's a little more fun. It's a little different. It's fun to shake it up.
I'm with you. Well, me and Clint talk about this all the time, but I wanted to capture this for you guys to show you this really cool concept to, again, how we're driving revenue in our multifamilies to ultimately create more value for our companies and for our limited partners. Okay, I'm here at Hostcon with Drew Hitner. So Drew's got a pretty cool background. He does a lot of lending, but he's also an entrepreneur just like me. Does a lot of short terms, has some long terms. So man, tell me what's new in your business? You were just having a cool conversation inside.
Yeah, so the thing, personally, what I've realized in my business is I like helping other entrepreneurs more than anything else. And I feel like just being in the room with those type of people is my superpower. It's so easy to relate to those type of people. And I'm like, well, I've been an Airbnb superhost since 2015. Those guests typically aren't my favorite people to deal with, just to be frank. And so what I've done is I've lowered some of my property count because I want to focus on the A-class properties and then put more of my effort into just helping more people secure loans, especially in the entrepreneurial space, because a lot of entrepreneurs don't think they qualify for good loans.
That's my favorite part, right? So a lot of people think you have to have this amazing W-2 job to be able to qualify for loans. One of my favorite things about Drew is Drew helps people who don't necessarily check that box, right? But how do you do it? How do you work with these people?
So the reason I love helping the self-employed people is because they've been told no by so many. And the reason is because the conventional way to underwrite self-employed is they take the net or the AGI number off their tax returns. There's a way to underwrite these loans now where you take the gross, just like you would take the gross off of a W-2. So the W-2 number is the gross.
That's right.
So once a entrepreneur, contractor, business person knows that, my question is typically, the conversation is always like this. Casey, how much money did you bring in to the business? It's like, well, my net, I'm like, no, I know you're used to talking to other lenders, but like it's literally the number that comes in the door. If it's $1 million and you write off $1.1 million, guess what? You're still going to qualify. We're going to be able to use $83,000 a month to qualify you, right? Because that's, $1 million divided by 12. And then you're going to qualify. You don't think you qualify for that one house, you would actually qualify to probably buy 4 of those houses. So you're going to be overqualified. Now, the rates are just slightly different, but not massively different. All just depends on the down payment. But the great thing is it's still 30-year debt, and it's very feasible for somebody that's a high net worth or high income earner, even if you're self-employed. So it's just the myth. If you're self-employed, you don't always have to go back to your CPA to try to have that back and forth on like how much income should I show. No, that's not what I tell the CPAs. I'm like, do whatever you can to help them fight Uncle Sam, and just know that we can use the gross number. All I care about is the big number of income.
Yes, guys, if you didn't hear that, that is gold, all right? I've always called it, you call it the double-edged sword. It's like, well, you're either going to write it all off and not claim any income, or you're going to show a bunch of income to get loans. What Drew's saying now is you can actually take the write-offs if you have the right mortgage broker. So why don't more people do this?
It's just not prevalent. So a lot of there's so many loans that are out there right now being originated. 90% of them are going to be your government loans, right? So the government loans, FHA, conventional, VA, USDA, they don't allow you to use that gross number I was just talking about. They make you use the net because they don't want you to take a government subsidized lending product and then also not pay the government on the tax returns, right? And so that's okay. You just do a non-government loan that allows you to do that. And the reason people don't know about it is because, me included, I didn't know about it until I was a few years into the industry, and the stigma of doing a self-employed or an entrepreneur loan is like, oh great, here goes all the paperwork, and it's death by a million paper cuts. But as long as you learn the guidelines and the underwriting processes, it's literally just as easy. All you need is 12 bank statements. We don't need a 1099. We don't need a K-1. We don't need any of the tax returns. Keep that in your email inbox. The lender doesn't need it. We can close a loan for 10% down on a primary.
Got it. Love it. So one of the other challenges as an entrepreneur is our cash flow, right? We ride this roller coaster, right? So how do you mitigate that and having liquidity? Because that's immediately when I think about 12 months of statements, it's like, man, you're going to see some months that are great, other months are down.
So that's more of like a real estate investor entrepreneur. So same thing is, it's a 12-month look back, or you could do a 24-month look back. So what I would say is whatever you think gives you the highest average, because if you had 1 month where you brought in a legitimate $1 million out of the last 12, well, guess what? That still averages to $83,000 a month, right? So that's why they ask for that many statements, is to help create that median or that average.
Got it.
Great question.
Yeah, and they're more, just to clarify, they're more looking at your gross revenue across 12 months to see the consistency.
Yep, and so to break that down one little further, so if you're one of my clients, you just came to me with that, I'm like, okay, so is that your cash cow business? Is your cash cow business the income you receive from rentals? Or do you have a construction company that does $4 million a year? And if that's the case, let's just leave the rental income out of the picture and only use the construction company.
Wow. So you can kind of pick and choose what income.
Exactly.
Even that's huge, because again, a lot of people run a business that has a lot of write-offs and doesn't bring in it, but it might be your buy and hold, right? Your buy and hold is typically not throwing off a ton of cash flow, depending on where you're at, versus your fixing and flipping or your wholesaling company. So you can kind of strategically do that.
Combine both, right?
Yeah.
You know, like I always say, less is more. So if you have a cash cow company, let's use that. Like, I know that everybody that does a loan, it's death by a million paper cuts. So how do we just cut you one less time, right?
There
so
you go.
I don't want to see all that unless we need to see all that to make sure you get the loan that you want.
Okay. So Drew, what's the best thing? So I think this is going to completely mind shift a bunch of people. So how can they actually? If somebody's listening, they're an entrepreneur. They've been told that they can't get loans. They're like, all right, I'm going to do it. What's their first step?
I think the easiest is social media at Drew Do Loans.
Okay.
So DREWDO Loans. And there is a Drew Does Loans. That's not me, but they're Drew Do Loans. And just book a consultation call with me or a quick phone call. My Calendly link is in the link in the bio, so it'll be me. We might have one of my assistants help coordinate some time if something on the schedule doesn't work out. But that's what we do. We have the loan consultation, and then that's kind of like the discovery call. Like, what do you want? Like, when you put your head on the pillow and you're thinking about financing, what is the loan you want? And then maybe that's reality, maybe it's not. We put it all together, and then we start the pre-approval process. And then once you're pre-approved by sending us documents, then we have a clear mortgage plan call where I'm like, you get to choose your own rates. You can get this rate, or this rate, and then we go through what the differences are and why somebody might actually choose a higher rate compared to the lowest rate that's available on the rate sheet. So, and it's kind of educational, and then we ask for the business just like anybody else should, but we want to make sure that we're a great fit for the borrower.
Yeah, I like it, guys. And I talk in a lot of my videos about getting to know your lender, right? Get to know your small banks. Just like that's how I've gotten to know Drew. I picked his brain. Even if you just do that consultation, what I love about it, even if it doesn't work, Drew's going to educate you just like he is now. You're going to learn a little bit more and just continue, see if it's a fit. And if it's not a fit, at least you're going to learn something. You'll be able to start to apply this and do what you need to do.
Yeah, it's just, I'm of the mentality that you just give it all away. Yeah. And then I don't expect for anything to actually happen. And it's, as long as you ask for the business, you're transparent about fees, rates, terms, pricing, then everybody wants to work with somebody that's relatable. And, I'm an entrepreneur with Airbnbs, and so we happen to be at an Airbnb conference, so that's very relatable to a lot of people. And, if we need to talk about Price Labs and Logify and, how to dynamically set up a listing to make you a top 5%er and in that given market, we can talk that too. But, my bread and butter has always been mortgage and just helping people figure out lending situations, because everybody runs out of capital. If that wasn't the case, there wouldn't be mortgages. So.
That's right. I love it. Well, guys, yeah, I heard you got to do something to get out there. You got to be talking to the right lenders, guys like Drew, to ultimately go and achieve your real estate goals. So we started our Problems to Profit Zoom. Actually, we're in week 6. Done 6 weeks. Sandeep has been a dedicated guy. He's been there almost every single week. Learned a lot. But I want to say, what's been your biggest takeaway so far?
I really like the fact that whenever we get on that Zoom call, Casey does, he makes the calls for anybody coming on those calls. All the content on it is so raw. I personally got a lot of value out of it. You made a couple of calls for me in those Zoom sessions. And I've recommended a lot of my friends, other community members from Subto. And they all got really good, I got really good reviews from them as well. They say, hey, it brings a lot of value because a lot of them are new investors into real estate. And there's so many different avenues, sometimes the content is too much. But some of the stuff you show on your calls is exactly a lot of us, that's exactly what we're looking for. So it's been really helpful, actually.
Yeah. Awesome. Yeah, and like I said, Sandeep's taken the initiative to actually bring deals to me. bring deals on the Zoom, and we've got to call us sellers, work through them. Talk about like when you actually get to have your seller like called live, and like is that a good way to learn, or what's been the most beneficial part?
Oh yeah, it's a great way to learn. Everybody can follow a script, but when I've seen, I've been on sessions with other Subto members as well, where we'll do role playing, but there's always a question that you don't know, and everybody seems to get stumped on it, and they don't know how to answer it. But with your calls, and a lot of the objections that some of the sellers come up with, I've seen you respond to it so quickly. I mean, of course, you got the experience and whatnot, but it gives us that raw footage or that raw experience that we're really looking for, and I feel like that's speaks volumes, honestly.
Yeah.
I really love that.
You bet, yeah. I'm with you, right? It's like you could role play. Role play is you should always be doing that, right? But until you see how it happens live and start to get more comfortable, then I'm hoping that you guys can start to put yourselves in that shoes, right? Like, hey, could I have answered that? What I love a lot of students do is we have a chat going the whole time, right? And as I'm talking, they'll be kind of like, they'll be actually throwing off answers, right? So have you done that? We're like, hey, all right, how would I have responded to that question?
Yeah, no, definitely. I'm actually, sometimes you'll be on the call, and I remember there was oh God, I don't remember exactly what you said. I think you mistake one of the students' name, and I was like, hey, Casey, and I noticed like a lot of the other students are very engaged as well, as you're talking, they're gaining feedback, and they're going ahead and giving you feedback as well. And I noticed, like, I've attended other Zooms as well, they're all good, don't get me wrong. But when it comes to yours, I see a lot of everything. There's always new people coming on. I see the same faces as well. But everybody's bringing in deals that they really want you to go ahead and either close out for them, or at least get that. A lot of people, I've even seen where a lot of students will tell you, hey, this is a dead deal, right? And you'll get on the phone, and all of a sudden the student's like, oh wow, Casey, you did much better than I did. I wasn't even getting responses at some point. And it's really neat to go ahead and see stuff like that. It kind of gives us that hope as well to, hey, maybe follow up after a couple of weeks. And I know you preach that as well. That's also another really key takeaway that I've gotten from your calls.
Yeah, good point. And you really can't call the lead dead until you've really shooken every part of it, right?
Absolutely.
And I encourage people on that call to maybe say you think it's dead. Let's get on the phone, or let's at least talk about it before we call them. Maybe it's not dead, and let's get on there.
Yeah.
But yeah, I love Cindy. You made a good point. A lot of people have been coming, and the cool thing is it's growing every week, right? Because people want to come back. A lot of deals we're working week over week, so people stay engaged. And then the other cool thing is people like Sandeep, they're going out and telling other students, and they're coming in, and that just helps grow it every week. And just because the goal, my whole goal when I first reached out to Pace of like, hey, I want to have this opportunity with Problems to Profits to ultimately help out students. But ultimately, I talk to so many sellers, and to me, it's just a great opportunity for me to. I'm going to be calling people working on this anyway. I just love to be doing it in front of students and helping them take the next step. And then the partnerships. It's been so cool that people like you, they're bringing deals on that they can't close. And if we can help close deals together, especially deals that they couldn't have closed otherwise by themselves, that's what really gets me excited.
Yeah, no, definitely. I've gotten a tremendous amount of value from your calls, and I attend them every week. To be honest, I've missed all the Zoom calls. But I try to attend yours for sure. I know you said, Pace wants to make sure you get feedback, and you're constantly getting people coming in. I hope, your calls stay on forever, because it helps. Because everybody's getting some sort of a lead, every week or whatever it may be, right?
Yep.
Especially some of the newer students. And it's great to go ahead and see, like, hey, this is not some generic lead, because we have no idea where the lead came from.
Yep.
Was it a warm lead, or, is this almost, I guess you can say, it's kind of scripted? No, if I come in and I get on the call, like, hey, I have this number, this is an agent, or this is a possible seller, and you call them and you see exactly how the conversation works, I think it's great, because it gives us that confidence booster as well. I've only been in Subto, to be honest, for about 4 months now, but I've made calls to agents. I've actually made a lot of connections in Subto as well, and a lot of that confidence came from a lot of your calls and some of the I guess you can say objections that you've come up with sellers or agents. I've seen exactly how you overcome them, and it's helped me a lot, because some of those objections have come up with me when I'm talking to agents, or I'm even talking to other students. I have a whole list of wholesalers, same thing. I know exactly what to say, what they're looking for, what I can do for them, and as opposed to what they can do for me.
That's cool. Man, that gets me excited, right? Students, tuning in, but then applying it and actually starting to move the needle. That's awesome.
I
Well,
actually
guys,
just closed another property.
You
last
did?
week. Yeah.
Heck yeah.
Yeah, I closed another property, and it was the same thing. I made a connection with another wholesaler, and he brought me this property. We closed last week, and that's actually why I'm here. We're getting it furnished for
Get
Airbnb
it
now.
furnished here in Houston. Oh,
Yeah.
you told me that, Sandy.
Yeah.
So cool. All right, so guys, tune in every Friday, 11 to 1 Central, so you guys can be just like Sandeep, who's learning and applying and now closing deals. All right, I'm here with Subto Drew, one of my favorite guys in Subto, one of my favorite people in Houston. But man, let's talk about one of my favorite things that Subto Drew does is he's able to be a part of the community, but bring them in, whether it's working on deals with you or helping you find deals. But man, what's been the secret to success in being able to just get people in and help them?
Yeah, so a lot of it too, like when I was in a position getting started, I never had somebody to go walk a flip with, to learn how to do paperwork with. So I feel like it's my obligation to teach other people how they can do it. I'm not trying to be a mentor to people in the community. I'm trying to just be a friend. So in the fact that I'm able to help them be a friend to them and help them with guidance and picking the right contractors and doing all this other stuff, they provide me with more lending opportunities because they have money for me. And they also allow me to get more deals too because they send me more deals.
Love it. And what's been one of the keys to like help, especially somebody who's just starting? Like, how have you been able to connect with them and really get them going? Because they might not know where to go.
Yeah, a lot of it is overcoming a lot of their mindset issues. That's why going on ride-alongs, going on meetups, seeing people like you that are actually performing at a high level, connecting with individuals like you to see, hey, it's actually possible. Casey's doing phenomenal work and it's really inspiring. But also more than anything, it's to say, hey, if Casey's doing it, why can't I do it as well too, right? But if you see people actually doing it, that's what makes it so much easier. So if I'm just getting started, I would connect with people like you that are like, man, you're doing it at a high level. What do you need? You need more opportunities. You need more lending opportunities. So I would provide that for you if I'm just getting started.
Love it, man. And playing devil's advocate, some people might think, hey, I don't want to work with a bunch of people. It's going to be complicated, partnerships. Like, how have you leveraged it to where you work together and it's win-win for everybody?
Yeah, so it really just depends on what people need, right? I'm not going to say, hey, I need money from you and you don't want to loan me money, right? But if you say, hey, I want to loan you money and I just want a flat interest rate, then we can partner up together. But if it doesn't work mutually, I don't want to work with that partnership at all. So I'm really catering to what the individual wants. Very similar to sellers.
Yeah.
Right? The sellers really want, hey, I want a cash offer and I just want to walk away clean and free. Or other situations, hey, I want the most out of it and let's structure a seller financing deal. It's very similar with other lenders and other partners.
I love that so much. Yeah, you're just understanding, asking good questions, getting to know them, getting to know their gap or where they need help.
Yeah.
Man, it's super cool. So like, what big plans do you have to continue to do that? You got anything else in the pipeline, or what's 2025 look like?
Yeah, so I want to still do more creative deals, but I also want to do a lot more burrs, right? So I want to buy a house, rehab it, refinance it, rent it out. But some of those burrs, you can't get perfect burrs, right? You just have to raise money at the end of it. So what I want to do is I want to do a burr, pull out as much equity as I can, but then also raise money on top of that. So if I have to bring 10, 15, 20 grand to the table, I'll partner up with somebody that raises the capital. They get the capital. They become 30, 40, 50% partners, depending on how much they bring to the table. And I'm able to get a house that I'm a 70% owner on that I have to bring any of my own money. And there's equity. So I'm doing a hybrid model of a burr, but with adding a private money lender on top of it, private money partner on top of it.
Oh, love that, love that. It's the burr strategy, one of the best out there, right? But as you mentioned, it's become difficult with prices and rates and everything. And if you leave money into the deal, who cares? Because you're still keeping the majority equity.
I'm keeping majority equity, but I'm also not bringing that money to the table as well.
Exactly. You're still you're executing the burr. I love it. Love it. So last one, easy one for you. Why do you love Houston's market so much, or why are you so bullish on Houston real estate?
I mean, Houston's one of the top 5, most populated state. It's 1 or 2 every year with investor activity. There's so much investor activity. There's so much potential here in Houston. There's a massive downside with Houston with taxes and insurance, which I don't really like, but I feel like I can pivot to it. I'm bullish on it because I'm here locally. I love the area. I love where I'm investing at, and I'm finding opportunities that I can either pivot with a burr or I can do an MTR strategy. So I really want to stay here for the next 1 or 2 years and then maybe start pivoting to other markets if I can get to that point. But I want to establish my foundation here in Houston.
Absolutely. I love what you said though, because a lot of that's why they're scared of Houston, right? It's taxes and insurance. But last question, how are you overcoming that? Is it just building equity or finding properties a big enough discount, or is it the sub 2 stuff?
So yeah, it really just depends. So we're staying out of some markets that don't have the highest insurance policies, and we're also staying away from a lot of the higher tax markets as well too. So we're really being niched down to where we really want to be at. So we have a really good broker here that we just connected with. They're helping out with insurance companies that are like lowering our insurance premium by still keeping a lot of the coverage. So if you want that connection, we can give it to you as well. But also, more than anything, just trying to adjust with what's going on with the market, right? It's an election year and interest rates are dropping. I'm not sure if interest rates are going to stay dropped or if it's because the election's coming. So we're still trying to pivot and figure it out. Who knows? A year from now, I might pivot to another market. It just depends.
Yeah. But the beauty of being real estate investors, especially like us, when you go direct to seller, whether it's high interest rates or low interest rates, we can still make money. We're either buying at a discount or we're going, or it's like now we're flipping. We're moving deals.
I love it, bro.
Cool, man.
Can I ask you some questions?
Absolutely.
Dude, let's do it. Okay. All right. So I'm here with Casey. We're here at Hostcon. Casey, what has been like your best connection here at Hostcon?
Ooh, best connection here at Houston. Man, it was cool was I connected with a couple people from Subto.
Yeah.
Actually, who I'd seen, but I haven't met in person. And I got to actually develop a deeper connection with them, get to know what they're doing in their business. They're actually, little did I know, they're investing in Houston with some stuff out in Katy. So that was a cool one. And then the second one is a guy that's doing more pad splits because there's more and more people doing pad split. And we've not formally done it in Wyoming, but we rent to college kids and we effectively have one lease and we'll have multiple people. I mean, effectively they're renting by the room, but it's one lease. But it's cool to talk to him about how they're applying it, like what are some of the rules, what should you look out for, and if you go that route, because ultimately I feel like that's another exit strategy for us.
Yeah. I love hearing you talk and educate. It's really good, by the way. Good feedback. Okay, so Casey, what are you doing? What does your portfolio look like today, and what are you doing? What are you doing right now? What projects are you working on?
Yeah, so yesterday, oh man, it's a funny story. So we were closing a deal yesterday. I was so bummed I missed you. But we closed a 23 unit yesterday, but I was like, and it all got blown up because my note, it was exciting, right? But I had this notary I had to sign yesterday at 1 o'clock. It was a mobile notary. It was a disaster, just way more complicated. But we got it done. Just took like 3 hours to get it notarized. Closed it out. But anyway, exciting deal. Closed 23 units in Southwest Wyoming. It was going to be, again, I'm playing the negative, but it was going to be 39 units. I had another 16, but it was going to be a Subto. But anyway, we actually knew the lender. It was a private money lender that was doing Subto, so they wouldn't let us assume their loan. He blew up the deal. But anyway, we still took down 23 units.
Wow.
Made a $100K assignment fee. That the cool thing is we're going to keep it, and we did it with a really cool partnership through Subto. Actually, I met them in Owners Club, got to know them. They're investing in the deal. They're getting depreciation. I'm adding more units to my portfolio. And actually, fitting that we're here at the SDR conference, we're actually going to take some of those units and make them SDRs because there's 23, right? My thought is maybe 4 to 5 of the 23 will make into medium-term or short-term rentals, increase the revenue, and ultimately increase so that's going to help out the investor. It's going to help out us. Just so many benefits, right? And it's going to help us when we go to refi. Right? We're going to increase the NOI to where when I go refi, hopefully we can, because the goal is to actually refinance in 18 months, be able to pay the investor back and keep the asset.
Yeah. So what did the deal look like? Can you break down the deal high level?
Yeah. So 23 units, we bought it for $2.35 million. We put $400K down. So most people that would scare them away, but I was getting that seller finance piece was at 4%. And where are you getting 4% nowadays, right? I mean, unless you're doing some of these crazy ones, we're getting 0%, but you're not getting that probably on a multifamily.
Yeah.
So 4%, and it's amortized over 40 years. So I got a really low payment. And so we put the money down with our partner. He brought in the money to put the down payment.
He brought all the $400,000?
Yeah, he brought all the $400,000. Yeah, and we brought a little bit more for the assignment fee. But here's the key, right? The key part is it'll cash flow, and that's because I've got a really good interest rate. Wyoming taxes and insurance are low, so it cash flows, and it's in a market that's growing. So I really believe, I ran a pro forma, in a base case, we'll be able to cash flow, right? But if it goes how I think it will with the growth, the rents are going to increase. We're going to be able to get that investor out and then be able to hold it long term.
Wow, that's impressive. So, okay, last 3 questions here. So what are you going to do more of this year or in the next calendar year? What are you going to do less of, and how can we help you in your business?
Oh man, more of raising money. So we launched my fund this year, and that's kind of been a big piece. So you'll like this. When you're doing direct to seller marketing, it's all about funnels. It's all about working the leads, right? And follow-ups. We're building out the exact same process for raising money, from like a Google ad or a Facebook ad to moving them to a webinar to doing like an initial phone call, right? It's the same process of working a lead when you're working somebody investing money as a seller, right? And I don't want to downplay that it's not it's a relationship, way more so. But we're working on building out that funnel to where, because ultimately, as you and me know, like when we talk to people who want to raise capital, once they get to know us and know what we're doing, it's easy, right? It's such a win-win, right? But the point of this marketing is now we're getting in front of more people, so ultimately we want to help more people, right? Because when we get to talk to them, it's such a cool, unique win-win. So I'm excited with my fund to be able to do more marketing, raise more money, and then what I want to do more of is eventually start lending it out, right? Because I've always been at a point where I've always had more deal flow than money, right? But I'm hoping in the next 12 months it's going to flip. So we've got more money, and we're making all these great connections at conferences like this with people who need money. And we know how to underwrite, right? So if I know how to underwrite, I can protect my investors and make sure we're getting into more deals. I can take on more capital and ultimately keep getting that return.
Got it. So what are you going to do less of this year?
Okay. So do less of. I think I'm going to do less of being involved in my operations and really delegating to teammates, right? Like it's been a process to be able to like kind of give up the reins, right? And trust the people you hire to do their job, right? So I'm going to do less of that. We've been working on our bookkeeping and really getting that dialed in, because I'm very involved in that and seeing how, so getting that delegated, I spend way too much time looking at that, right? So getting that delegated, and then, just really letting my teammates do their thing so I can go raise money and help close deals and create bigger partnerships. That's the ultimate goal.
And then how can we help you with your business?
Help me with my business. I would say, it's always making connections, I would say two things. It's always raising more money, right? If you find different people who are looking to lend on deals, or even, what I found is people who are maybe lending money and doing really good job on short-term money. We partnered, the last deal I just did, the 23 units, that guy's actually a hard money, more of a like gator lender, whatever you want to call a short-term lender, and he's making a ton of money doing it, but it's all taxable. So he came in as a long-term lender for me. He's going to get all the depreciation as multifamily assets. So working with lenders that are doing really well, or people that are just making good returns on whatever they're doing, right? It could be a small business owner that's crushing it and they need the tax write-offs. I would love to connect with those people to buy more multifamily, so we're going to get not only the long-term cash flow and the wealth, but they get the tax write-offs in year one.
I love it, bro. All right. Thank you, guys. We'll see you guys.
We're at Hostcon with Casey Woodburn, shares one great, glorious name. But so Casey just closed, coincidentally, we both just closed big deals, and we structured them slightly different. This is almost $1 million, $900,000 short-term rental. So I want to tell us about the deal, and I want to hear about how you're funding it.
Yeah, so the deal is a new build log cabin. It's out in the Shenandoah Valley, super awesome market. And we decided to basically sell equity in the company. So we needed to raise $375,000. That includes the down payment, the furnishings, the setup, the design, basically everything we would need to set the property up. And then we sold it in increments of $25,000, so 15 shareholders. The managing partners would basically get 27%. 27, gotcha. Split three ways. And then the other remaining 73% was split among every owner. So each person, if we were looking at $170,000 in gross revenue, each person would get about a 13% cash-on-cash return. And then they would get about 4.87% of the equity in the property. So that means that they would receive a percentage of the losses, a percentage of the appreciation of the property upon exit, and then obviously the cash-on-cash return would be given in quarterly dividends. Super unique deal, especially in today's market where it's just really challenging to find properties in the short-term rental market that are going to cash flow. We knew that we wanted it, and we just had to figure out a way to make it work.
Cool. And what I like about this is here we're able to get multiple people into a deal, because what I've learned with raising money is if you get, when you make people money, they want to reinvest, they're going to tell more people, and it's just going to grow. So I love the spider web you're creating with a lot of people, but how did you structure a deal with so many different people in it and get everybody on board?
Yeah, so this is kind of where it's like, why is it not a syndication? Why is it not a fund? This gives us the ability to still have people actively participate. So they have the rights to vote. If somebody wanted to exit, we would vote on that. So we'd need like 2/3 vote for somebody to exit and sell their share. If we want to exit the property, refinance the property, make any major decision, not like small, minor, like, oh, should we price it for this night? And it also gives the people the ability to learn. So we have a lot of partners that have been interested in dipping their toes into the market, but they just aren't ready to buy their own asset. And so this gives us the opportunity to share our knowledge, coming from a management background, having that experience in operating, maximizing, and giving people the ability to not only get experience, but also earn money getting that experience, which is a really cool opportunity and definitely opens doors down the road.
Yeah, I love that. I love that concept because I have so many deals. You just find people who they want to learn the process, right? And if they have a little bit of capital and they can make money on it, it's great. And the cool thing is about Casey, like I always pick Casey's brain on stuff when it comes to our short-term rentals. If you guys have seen our growth in short-term rentals, a lot of this is me talking to Casey, be like, hey, how should we do this? How should we do that? So when you partner with somebody who really knows what they're doing and you can learn from it, I can only imagine why those investors were so excited. Was that a big part of it?
Just being able to... I think, and I can attest to this, partnerships are crucial to growth. Like just being able to learn from someone else and finding somebody that's a subject matter expert in the market that you want to grow in, you are going to do it so much faster. Like, we always talk about the 10X method. You're going to do it so much faster and in such a better rate than trying to learn everything yourself. So.
Yeah. And I like that you made it digestible, right? It sounds like it was $25,000 on each one, right? Okay, so they split it up in $25,000 chunks. So that was probably a lot more manageable for a lot more people, right? Versus, oh man, I'm going to go put $100K into this deal, and this is the first time I've done a deal with you.
Yeah, exactly. It made it a lot easier. People are a lot more comfortable with that amount versus 50 or 100,000, and it just made the deal a lot more easier to kind of take chunks away. And we raised that money in about a month and a half.
A month, that was my next question, how it was raising it. And was it a long process getting people comfortable with it and understanding the deal, or were they just like, you know what, 25K, I know you know what you're doing, Casey, let's do it.
It was a lot of conversations. It was probably like a 1-to-4 ratio of like for every 4 people we spoke to, we got one investor that was ready and willing to sign on. What helped is that I had built a pitch deck months ago. I knew that I knew and believed in Shenandoah. I actually already have a short-term rental there, so we had the data points to prove that this is a sturdy market or stable market. And I had built kind of data points and had done a lot of data or research around, hey, this is what, there's 4.5 million tourists every single year that go through this market. So it's great. And we knew that it would see a lot of success. So we started putting together that pitch deck geared towards this property. And that's kind of what gave us the ability to send it out to investors. We definitely had to kind of work a lot on the numbers and just the underwriting of the property to, sell people on it. Gosh, me and my partners probably talk more than we talk to our wives every day, But we got the deal done, and super pumped to see it to fruition.
Yeah, man. Well, it's super exciting whether you're going to, again, do it through multifamily, fix and flip, or like short terms. I just love that you're giving multiple people the opportunity to get into the game, learn the game, be participating in an active deal, going to make a good return. Man, I just love how you structured it. And I don't know, it's inspiring me to go involve more of our investors, like in little bite-sized chunks where they can get in and learn and be a part of the process.
Yeah, it's awesome, man. Being able to work with others, give people a little bit of taste of that success, and just getting them excited about a market that they might not have moved into otherwise. I mean, what a cool opportunity.
Yeah. Well, what's next, man? Now that you put this deal together, you thinking about putting another one together?
We're starting a fund. We are set on. I think what my next focus on is going to be building a landscape resort in Shenandoah Valley. Guys like Isaac French, guys like Ben Wolf, where we're moving into experiential. We've been moving into experiential hospitality. There's 7 million Airbnbs just alone in the United States, and most of them, or I don't want to say most of them, but a lot of them are just owned by bad operators. Yeah. And so that's why you see all these, the sky is falling, Airbnb is dead articles. It's because people just aren't operating the right way. There's a book called The Power of Moments. And it breaks the power of moments into these 4 different elements. And one of the elements is like vacations. One of the elements is pride. One of the elements is, I think like elevation, and I can't remember the third one, but or the fourth one. But if you can build an experience that hosts go to that property to feel that, and you can kind of combine those, make them feel a certain way, you're going to be so much further along. And so I think for us, being able to build that experience and get, Isaac French yesterday, he talked about how design is one of the most important amenities in short-term rentals, and I wholeheartedly agree with that. It makes you stand out. So combining that with elements of that can create defining moments for people, you're just going to build such a powerful asset, and who knows what you can build in the future. So I think that's where we're headed. I think the single-family home space and what you can turn it into is really cool, but I think designing something around experience is something that the Shenandoah Valley doesn't really have. Like, you see other markets like Gatlinburg and Hocking Hills, Ohio, which are very, I would say, saturated. Like Shenandoah has a lot of single-family homes that are really great, but I don't think it has anything else like this. So that's probably going to be something we're going to be working on in the next couple months, on getting that fund created, and then start working with architects and seeing what we can come up with.
Man, this is exactly why I come to events like this, is to network. I mean, I've known Casey since last year. We've stayed connected, and man, it's just relationships like this create opportunities, and who knows, maybe the Casey Squared can put together some short-term
awesome,
rental
man.
funds, put it
I would
together.
love that. I would love that.
Awesome, man. Good to see you.
Yeah, you too, brother. Appreciate it.
Yeah.